Hey everyone, thanks so much for being here. My name is Brandon Lazar. I'm the founder of Ninja VA and Hourly IQ. And I'm super excited to come to you today with a training on the riveting topic of budgeting. Okay, so what we're going to do, regardless of where you're at, or maybe what your financial literacy or your confidence interval is like when it comes to numbers in general or things like the budget, we're going to pick up wherever you're at and we're going to get you to the point where you feel confident and you feel like you have a plan heading into 2026. Okay, at the end of the day, numbers are happening behind us, whether or not we have a way of seeing them and exposing them. So we might as well be real with that fact, embrace it, and, just try and use them to our benefit, right? It's the dorkiest saying in the world, but math is the path. So with that said, we put together a really cool giveaway sheet for y'all, and I'm really excited to just dive into that. What we're doing is we're basically continuing on where we left off in last month's training. So you might recall we went over this Google Sheet here, and this is designed to set your goals for the coming year. Okay, month by month, you essentially fill out each of the yellow boxes, and it'll not only spell out what you should be targeting for each month coming up, but it also breaks it down into very approachable numerical metrics, things like the jobs you need, the number of repeat jobs that you can basically just assume are going to hit your calendar, the quotes required, and then even down to like what the marketing spend is. Okay, so the whole idea of today's call is we're going to pick up where we left off with this goal setting calculator, and it's going to dovetail right into these two tabs here that you see, budget 1 and budget 2. Okay, is everyone with me so far? Does that make good sense? No news is probably good news, so let's keep rolling with it. Awesome. So the idea here is you have to fill this out in order for budget 1 to basically be functional, okay? When you do that, there's these boxes on the side that are also very important, and sometimes when you load it, you might not see them, okay? But they consist of what you're looking for as far as a revenue goal for this coming year, the average job size roughly that your business has per job, the repeat rate, which is if you're in an industry where, say, it's a little bit recurring, like window cleaning, it might be as high as 50 or 60 or 70%. Whereas if you're a painter, it might be very low, might be like sub 10%. Because a lot of people, once they get their house painted, they're not looking to get it done again in the near future. The close rate is basically if you send out 10 quotes, how many of those convert into jobs? And then the cost per lead is basically depending on how you advertise your services will dictate what your cost per lead is. Various channels will have varying levels of quality as well as costs associated with getting jobs from those channels, okay? Once you fill that out, you're gonna basically load into the budget 1 page, and it's already gonna bring the target revenues per month over into this sheet, which is really nice. And if you were talking exclusively to a bookkeeper or an accountant, that's pretty much all they would put at the top. But we like to add our own kind of unique flair and industry experience to things like this. And one place you're going to see evidence of that is this section right here, where we have the number of jobs that get reiterated, okay? The reason for that is because the way we're structuring this is we have our revenue up at the top, then we're going to subtract out our cost of goods sold, and then our fixed expenses. And then at the end, we're going to be left with our net income or net profit, okay? The reason why we want to put the jobs here is because it's going to help us with the first step, which is basically inputting what we think it will cost for each of what we call the cost of goods sold, which are often also referred to as our variable expenses, okay? Now, quick and dirty, the way you know you're dealing with a variable expense is if you do one job or if you do 1,000 jobs, your variable expenses are going to get larger with the more jobs that you do. They're variable in nature. So depending on how much activity, how much capacity, how much volume you're dealing with, those expenses are going to fluctuate accordingly. Okay. So all you have to do then, because we've already brought in your sales figures, your target revenue figures, is you have to just put in a percentage here, right? Now, we started with what is likely your largest one, which is your cost of labor, your technicians out in the field doing the direct labor itself. Okay. Now, depending on the industry that you serve in or the state or province that you're located in, this will fluctuate. If you're, say, in soft washing, it might be 10 to 12%. If you're in maid service, it might be as high as 50%. So there's no broad stroke correct answer as to what you should be targeting. But the idea is we always want to be improving. You want your technicians to get more work done in a shorter period of time so that you're nice and efficient. And I think the final thing I would mention about this one is the way you price your work is part of your branding, right? If you want to be that white glove, top level, premier solution, you're obviously going to charge more. And that means that your cost of labor is likely going to be a little bit lower. For this example here, I'm just going to put 20%. And again, what that's going to do is it's going to set up a target for every single month then for that category, which is nice and helpful. The reason why we have this number of jobs stated, though, is because when you get into something like auto, gas, and maintenance, it might be hard to know, oh, yeah, that's a 1.8%er or that's a 2.3%er, right? Like it's a little bit vague, a little bit arbitrary. And you might not even know if you're 2% or 5% or 8%, right? But what you can do is you can just kind of give it a shot. And when you put in 2%, you can kind of run inside of your mind, okay, if I'm running 185 jobs, should we be spending about $3,000 on gas and maintenance, right? So it makes you might do the gut check and you might be like, oh no, like that's way too much or that's way too little. Great, go back here and you can tweak it up or down. Okay. Does anyone have questions up until now?
No, I'm good so far, Brendan.
Awesome. Okay. So the idea is we want to fill in all of the yellow boxes. And before we're able to do that, you need to fill in the goal tab, the goal calculator tab on the bottom here. So I'm just going to go in really quickly here. We might not really use subcontractors that much. Our billable materials, maybe we do a little bit of install, but mostly we're service based. Small supplies and tools might be nominal at 4%, and our equipment rentals are virtually nothing. Okay. You can see this starts to fill itself out quite quickly with the way we have it structured for you. And there's something I want to point out here. So what this is going to do is this is going to total off our cost of goods sold or our variable expenses at this point. And at this point, this is called the gross margin, meaning once we've gone out and paid for the direct costs of doing the work itself, what are we left to come home with? It's not profit yet, but what comes home in terms of our gross margin? We're still going to have to deduct our fixed expenses, but this is a really good telltale sign to see, kind of like a gut check to see, are we healthy at this point? A quick rule of thumb says that if your COGS are over 50%, you're going to be in a pretty rough shape in order to not only cover all your fixed expenses at the bottom, but also have room for profit at the end. Because if you don't have profit at the end, you don't have a business, you have a job. So we want to be targeting a healthy net margin at the end of it all. Okay. So there again, if you're seeing this number creep over 50%, that might be cause for a little bit of reflection to figure out why are we losing so much in just the mere delivery of your service. Rebecca, do you have anything to add or are we all good?
No, I think you're right on track there. That is just such a crucial number. And so to make sure that we're tracking down those numbers accurately and we're not missing that somewhere. So For example, if you ever put any of these expenses on a personal card, or maybe a tech or something picks stuff up, or there's just somewhere where maybe these numbers aren't finding their way into your QuickBooks, into whatever accounting software you're using, your VA can really lean in there and track down those numbers for you, because this is going to be really critical to make sure it's accurate.
Awesome. Agreed. So again, kind of from a zoomed out perspective, the idea first and foremost when we're doing budgeting is we have to set targets. Then when we get into budget two, we're going to put in the actuals and see what is the difference. Are we on the right track, or are we off that correct path? And really, the final part that we have to do here is we have to input our fixed expenses. Now, the definition of fixed expense is whether or not you do one job or 1,000 jobs, it doesn't fluctuate, right? So with our variable expenses, our COGS, they did fluctuate. You can imagine if you're running 1,000 jobs versus just one lonely little job for the year, these are all going to fluctuate. Whereas things like rent, it doesn't matter. It's due on the first of the month anyways, right? So what you're going to do then is, again, because it's the yellow cell, you're going to go through and you're going to input some sort of a target that's required to do this volume of top line revenue. Okay. Now, I should mention that that is coming in a little bit crazy. I like to deal with numbers that are just a little bit more proportionate. So from here, we're going to go through nice and quick, maybe our advertising and marketing to do a $26,000 month. Maybe we're going to put $1,000 into that. Our office supplies is say $100. Members and subscriptions, $50. Software, $300. Insurance over the course of the year might be $500. Maybe we have a cheap little office space with a yard is $1,000. Bank fees, $25. Office admin and payroll is say $1,500. Owner's payroll, $2,000. Utilities, let's say $125. And we also included a few other line items here where you can input your own, okay? It's worth mentioning that we want to make this really easy, as frictionless as possible to keep up with throughout the year. So what I always recommend is when you're doing your budgeting, make sure the way you classify different accounts and the way they appear in whatever you use to do your bookkeeping, be it QuickBooks or other, not only do we want it to be the same accounts, we even want them to show up in the same order, okay? Because in step 2 of this, we're going to input when a month has completed what the actual spend was for each of these accounts. So if you're finding that they're out of sorts and maybe you have to like merge 2 of these to get to one same account that's the equivalent inside of your budget from your accounting software, and they're out of order, that's just going to take you more time and it's going to be more friction. And that's what we want to avoid, right? So perfect world, your bookkeeper does your profit and loss up for the month of January. You're just going to get the Excel format or version, and you're going to copy and paste that column directly over into the actual column over here. Okay. Before we get there though, we basically want to spell out the rest of the path for January. And essentially there, what we're going to see is we're going to see our revenue, which came from our goal setting calculator, minus our cost of goods sold, minus our fixed expenses or our overhead, gives us our net profit. And we state that both as a dollar figure as well as a net income figure as a percentage. Okay. 2 things important to note before I kick it back to Rebecca. We have here owner's payroll. This is a really important one. Okay. You should be getting paid for the involvement that you bring to your business. And it shouldn't just be a matter of getting to the point where there's net income where you get a personal income as a result. Okay. That's really important. And we also want to look at this percentage down here. Okay. Because ultimately, if we don't monitor and manage the profitability of each month, you can only appreciate that at the end of the year. It's not likely going to be where we want it to be if you don't manage the smaller increments of time. In this case, it's per month. Okay. With that said, sometimes we have busy seasons and sometimes we have quiet seasons. In my business specifically, we only made money in 4 months of the year. Okay. The others were either at like almost a pass through zero or a wash. But in those 4 months, we did over $500,000 of EBITDA. So there's no right answer here. At the end of the day, though, you want to be targeting, I would say at the very minimum, a 10% net profit. To ideally speaking, if you have a squeaky clean, really efficient company, we want to be around that 20%. Cool. And that's maybe like the shameless plug for next month's training, which is going to be hiring. Expanding and contracting with your seasonality is absolutely everything when it comes to a home service business. We don't want to have too many technicians and have waste when we're not busy, but we also want to be able to expand our crew count and our capacity for when we are busy so that we can take advantage and harness those opportunities. Right? So that's what we'll be going into in March's coaching. Rebecca, do you have anything to add before we get into the second tab?
Just really briefly, like I think you're enforcing this really well, but just the mindset shift of just setting those targets and knowing where we're at all times, because we do get blinders when we're in our business. I mean, I get it here at Ninja VA where I'm like so focused on, oh, I'm going to coach on this with my team this week. And I'm just like, focus, focus, focus. And then Brandon's like, hey, what's this number doing over here? Right. And I don't really have a target for it. I haven't been thinking about it, but setting it up in advance like this and being able to just pop in here and go, okay, this is what our target is. And then Brandon's going to show us the actuals tab here. It really changes the mindset. And I think the momentum of the business too. So just to kind of reinforce what you're saying, Brandon, like starting here with this target set, I just think it's so critical for kind of keeping momentum throughout the year.
Absolutely. And what I like to always just like end with here is like, ultimately speaking, if we are basically coming up with a plan, essentially, we're spelling out what our top line revenue is going to be based on our goals. We're going to try and adhere and stick to our respective expenses. Then ultimately, this is the prize at the end of it, right? This is what you get for sticking to that plan. Now, if you don't like the plan or you don't like that number, now is the time, right? It's still early in the year. You can pivot. You could even have multiple versions going of this to try and see kind of what fits the best, right? There's a lot of different considerations and there's no right way to do this, right? A lot of this, although it is black and white numbers, it comes back to being actually quite qualitative. Where are you at as far as your headspace goes, your hunger, your motivation? What's your family up to? Do you want to blow your business up or are you good with just like a lifestyle situation, right? So that's the interesting part of this is it's actually not just scientific and it's not just art. As we head into the second tab, this is a very important portion of budgeting and it's often forgotten because it deals with maintaining the plan as we go through the year. So what we're doing in budget tab 1 is we're setting out what our targets are, both for top line revenue as well as for our expenses. And what we're doing in budget tab 2 is we're putting in what was the actual results of that month. Okay. And again, we want to always do this in the most savvy way possible with as little friction as we're able to create. But if you don't do this, it's no different than just creating a plan and then just wandering off into the woods, right? So in this case, let's just go through another very quick but fictitious example. So imagine we actually did better than we thought we would, and we did $30,000 in January. What that's going to do here, line by line, is it's going to tell us if we were above or below our target. Now, when it comes to our expenses, things actually flip around. And I'm going to show you what I mean by that. So in budget tab 1, we had a budget of $5,200 for our technicians. If we say blew through that budget and there was a lot of waste and we weren't very productive out in the field, it wasn't very organized, maybe we came in at $6,000. What you're going to find is this number goes red because we were over budget. Whereas if on another example, say we cut that labor spend, we implemented something like performance pay, everyone was keen and engaged and motivated and really working on their toes, thinking what to do next, then it's a little bit of a mind shift, but it's ultimately going to say we were under on our expense, which is green, a good thing. Okay. So it might take a second to just kind of figure out what we mean there. But ultimately, if we're over on our revenue, that's a good thing. That's green. And if we're under on our expenses, that's green. And that's a good thing as well. So if it's green, it's good. Again, we're going to just go through here and we're going to see, versus what the plan was, how did we fare when it actually came to running out that calendar month? Okay. So I'm just going to throw in some numbers here. And we're going to get to the point where we can compare how we did on the top section of what is our profit and loss or our budget. Okay. So in this case, our COGS actually came to 10,500, which is actually very close in the end to what we had budgeted, which would be a really good thing, right? Ultimately, that's the name of the game. We want to beat our revenues and we want to cut our expenses wherever possible. Okay. Same thing here. You would input all of your budgeted fixed expenses. And just to save everyone's time, I'm just going to grab this and throw it in over here. And looks like we have a cell issue there. We're going to correct that for you. Ultimately, though, we're going to make sure that we're as close as possible. And we're going to get to the point here where now we're able to review what were the results of that month. Okay. So starting over here, this was our target. We were aiming for a net income of $9,000 that month. Over here, we were able to supersede our revenue and cut our expenses. And therefore we were actually more profitable than what we had predicted. Okay. On the right-hand side, everything's going to total up as you continue to go through the year. And again, we want to make this as frictionless as possible. So it would be even a good assignment or a good exercise to go into your Google Calendar right now and maybe on the 10th of every month, recurring, set up a reminder message or event for yourself to just go in and update your budget. Okay, it's those little habits that are going to force to make sure that you're staying basically on the right path. And if you get to the point where you're starting to stray away from the path, then again, it might be cause for concern or a little bit of reflection. And that's it. It's not as scary when you get it out in the open. I know initially this can be a little bit overwhelming. There's a lot going on here, but really what you'll find is once you do it one time, it just starts to make a lot of sense. And we're always here to assist if you have any questions on how to use the tool provided. But like anything, it's kind of like a muscle. And the more you use it, the more confident and capable you're going to be. Do we have any thoughts, comments, questions here at this point?
Brandon, can you scroll down to the bottom half there where we just need to, you mentioned correcting that cell issue.
Yeah.
Someone was just asking in the comments, like, could you just walk through really quick how to correct that since they already dropped in all their information?
Yeah.
And for everybody else, we'll send out a clean fixed sheet in the with the recording.
Yeah. So basically what you got to do is you got to go equals this, the actual, minus the same account on your target. Okay. And again, I use the exact same ones. So basically my difference then is 0. But what I can do is I can put in some better examples now. So say my actual came out to 1,500, we blew our expenses, then the difference is going to be $500 at that point.
Thank you. Any other questions either about the sheet? Oh, Brian, go ahead.
Question. So I was filling out the prior sheet, I guess from the last meeting, but I like on this one I have to go in and fill out that whole tab again. Or is there a way to just add these two tabs to that other calculator so I don't have to fill that first sheet back?
What you could do there, Brian, is you could just highlight the yellows, just copy them from one tab and into this one.
Okay.
And just start with the better, newer version.
Okay.
Because really it's just a matter of this section of yellows over here, and then just the 4 or 5 cells over here, and then you'll be all good to go.
Perfect.
Yeah, we felt it was only necessary to kind of continue to build on it. Unfortunately, that means it's a newer version. And you know what? To be quite honest with you, when we get into figuring out how to hire the number of technicians and build the capacity required to achieve this level of revenue, you're probably going to see more tabs on this same one. So just a little glimpse into the future. Awesome. Any other thoughts, comments, questions at this point?
Yeah, I'll kind of open up, Brandon. So I think I shared last coaching session that I own a business, as most of you guys all know. And so for me, just seeing this version of high level, I think I saw Daniel say he lives in the woods, and you mentioned about, hey, if you don't have a plan, you're kind of aiming yourself and just wandering out in the woods. It's easy for owners to do because it's like it's this discipline that you bring, as simple as a spreadsheet may look. Filling it out, it really paints a picture, and if you can kind of honor yourself and adhere to it, you're kind of really, like you said earlier, setting up your own path, and I think I look at myself in the mirror where it's like I've been through months where I've been busy and I haven't looked down, I'm just doing the thing. And then I look back up a few months later and I'm like, what happened? Where did the money go? Or where did the marketing spend go? Or whatever. So it's definitely something that I need to get on my radar and get better at, is this budgeting thing. So this is very helpful.
Yeah, definitely. And to your point, right, it is a little bit qualitative and it's a little bit quantitative, right? It's a little bit of your gut feel. I feel like I should be making more money, but then it's also like black and white, like we need to trace where it went. And we should start that process before it becomes an issue, i.e. the targeting phase, right? Which is tab 1. Yeah. So I'd highly recommend this. We've tried and made this as frictionless as possible, as approachable as possible. Like you can just kind of build it into your day-to-day, your week-to-week, your month-to-month, or have your VA do it, right? Like
well, that's what I was going to say next. That's what I was going to say next. I literally had Carla go into House Call Pro. She pulled all the data in regards to the average job ticket, reoccurring business, close rate, all that stuff. She put in all that stuff. She went over to QuickBooks. She filled it all out, and it was so cool just to see the numbers get populated, and then it painted a picture of me instead of being blind in the dark. I've always had that data right in front of me, but because you made this little simple spreadsheet, it kind of calls stuff out, and now I'm seeing things a little bit differently. You know what I'm saying?
Yeah. And like, if it's your forte and you're excited by numbers and like this is your passion, great, do it. If you'd rather stick pencils in your eyeballs, then get somebody else to do it. Like, it's that simple, right? Go sell some work or something.
Yeah.
Shameless plug, on March 19th, next month, we are going to be having another one of these seminars. They're free to attend. They're open to anyone in the home service and trades community. So if you know of anyone else that could benefit from, just a very quick hit of what I would consider to be valuable information, that we're trying to make as timely as possible. We're trying to make it mimic the seasonality and what you're likely, kind of what the theme of the month should be. By all means, the invite is open, and we would love to have as many people as possible on these calls. And then the other one here is we are from Ninja VA. We do virtual assistant placements for home service and trades businesses. The whole idea is we want to leverage your time so that you can build and scale your business to the best possible way. And you don't do that if you're stuck in the weeds, doing the monotonous, doing the repetitive, right? So if you want to learn more about that, the link and the QR code is there, and we'd love to help find a rock star to allow you to propel yourself and your business at the same time. So with that said, Rebecca, do you have anything else? Closing thoughts?
Nope, just keep an eye out on your inboxes. I will get this, we'll get this recording edited and get the tool over to you. So I'll be emailing that over. If you're part of our ecosystem already and you're part of our school community, it'll be uploaded there as soon as it's edited. So just know that it's headed your way. So you can rewatch this. Please share it with anybody. We want to make sure that more people feel like they have control over their numbers. So by all means, share this recording.
Awesome. Last call. Any other thoughts, comments, questions before we conclude? Troy, you good, man?
Do you have the link for the school?
Yeah, Brian, I can shoot that over to you. Let me make a note and I'll drop that over to you.
Okay, thank you.
Yeah.
Awesome. Thank you, everyone. We'll see you next month.